You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. Welcome back to the Crypto Rundown, the program where we break down the crazy, just all sorts of volatile world of crypto trading. Yeah, we're going to talk spot. We'll talk the derivatives, the options, the futures, the skew, the volatility, all that good stuff. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting The Options Insider Radio Network. You guys know how to get at us. 2 p.m. Central, 3 p.m. Eastern is the live stream time for Crypto Rundown. So if you want to join us after the option block, take a little break in between there. Usually pump some fun content in there for you. Come back and join us live for Crypto Rundown. Get your fix for all things crypto. And then, of course, after the fact on your podcast provider of choice. We don't judge. Just however you listen live after the fact. If you like what you hear, leave a nice review. And then, of course, send in those questions, those comments. We do like to hear from you guys. And joining me on the program today, I do believe we are joined by an old friend of the program. It's been a little while since he's been on, but they've been contributing a lot of great crypto content over there at theoptionsinsider.com. Hopefully you've been checking it out on all the crypto technicals and all the comings and goings and the movings and shakings in the world of crypto. I'm John, Mr. John Pearlstone from CryptoPatterns.net. John, welcome back to the Crypto Rundown program.
Well, thanks so much, Mark. It's great to be back.
And John, you know, it's been a little while. I think the last time you joined us was back in March. So maybe let's start there before we even get into the Bitcoin breakdown. A lot has happened in the crypto space since March. The worm has effectively turned. We're not threatening 3,000 to the downside anymore in Bitcoin. It's a lot different regime right now. So maybe before we even dive into the Bitcoin breakdown, just walk us through what the last few months have been like over there at Crypto Patterns, watching effectively the worm turn out there and make this enormous move up to 10,000 and then 14,000 and then break 10,000 again on the downside and then back up, and all the vacillations we've seen therein. What's it been like for you guys over these past few months?
Well, it's been another day at the crypto office, but that's a lot more crazy than most other equities and investments you can be chasing. I think one point I'd make about it that your listeners might appreciate is it really did wind up behaving like a classic bottom. It threatened. It had every indicator that we were going down below 3,000, which was a key support level. All the indicators looked horrible, and then it took off and left everybody off the bus. And we kept going and going exactly like it did. And if people read our material on your site, they'll see we did a calculation of what kind of percentage increase from the bottom to the top there was on the huge run at the end of 2017. And it was almost the exact percentage run this time to get it up to 14,000. So point being that some of these technical indicators are starting to mature. You can start to follow and use them to trade in the crypto market, which certainly was not true a couple of years ago.
Good point. I think we'll dig into a little bit more of that as we get on rolling right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, let's get to it. Time for the Bitcoin Breakdown. A lot to break down. Coming into showtime, we're seeing Bitcoin hovering right around 10,740. That puts us right around 700 handles or so away from our last show. We were at close to 11,400, and we're at close to 10,740 right now. So, again, a little bit of a move up there, about 700, close to 750 now, actually, as we've seen this upswing continue. Earlier in the morning, we were shy of 10,700, about 10,696. So wait a few minutes. If you don't like the crypto levels, wait a few minutes, and then check them again. But still, big move. It hit a high intra-week since our last week. Actually, the high was right after our show last Monday on the 12th. It hit a high of 11,415, and then it proceeded to sell off in the middle of the week. We all know what a turbulent week last week was for the crypto markets, and Bitcoin crypto not immune to that, seeing a nice sell-off down to about 98.33, that bottom coming in around August 15th or so. And then we saw a bit of a rebound up to where we are right now, again, right around 10,700 and change coming into showtime. Maybe let's start there, John, before I get your technicals on what's lighting it up. There's been a lot of back and forth lately in looking at, crypto rallying on the days when the markets sell off and crypto selling off on the days when the market's selling off. So I've seen a lot of people arguing on one side or the other whether crypto is now the new flight to quality, whether it's not. What do you make of those arguments that crypto is this flight to quality asset? And maybe on a general level, too. I think we discussed it last time, but we have a few more data points now as well. What are your thoughts on the general level of correlation between Bitcoin and equities?
Well, two big thoughts on that. Number one is there's been a real divergence between crypto Bitcoin and crypto altcoins. And they've always been, obviously, second-class citizens to Bitcoin, but there's been runs where altcoins have just skyrocketed and Bitcoin's kind of held steady, and we might very well see that again. But Bitcoin is the one that I believe is developing a correlation to the larger, broader equities market. And I think its pattern looks most interesting. What we're watching the most closely is how it behaves similar to gold. And I'm sure you've heard and probably talked about the relationship of crypto being that flight to quality asset. It's mined, it's limited in total quantity. So it does have similar features to gold, although it's virtual versus tangible. But notice how it shot up. The market was struggling when it went up towards its highs. And then it pulled back, but it's staying. It's really holding a good chunk of those gains, a very good chunk, exactly the way gold has progressed over the last couple of months. So that's our take on it. It's starting to mirror and mimic the behaviors of gold, and it's interesting to me if this equities rally takes off here and continues to hold strength. Notice how gold hasn't really broken 1,500. So Bitcoin hasn't broken down, materially below 10,000. Our key level is 9,500. And gold hasn't broken down. So I think there's some correlations there that relate directly to equities because obviously people watch gold compared to equities too.
Yeah, if you're looking at it from a gold comparison, then you have to look at it obviously as a flight to quality comparison because that's obviously a big use case for gold. Whenever things are getting turbulent, a little risky in the markets, people tend to fly to gold. So sounds like maybe crypto, at least from a correlation perspective, developing a little bit of that sheen. I know there was a lot of talk in the last couple of weeks as well of crypto being a nice diversification asset, shall we say, for some folks in mainland China who want to remove themselves from some of that currency devaluation going on over there. So maybe some of that propping up. I know that was the big conspiracy theory floating around over the last few weeks. Why we saw that big move on that big down day out there. But speaking of, down days and up days, we've seen a pretty tumultuous week here, John. How are the levels we've seen? How are they shaping out, and how are they lining up with your analysis over there at cryptopatterns.net?
Well, if you take a look at a daily chart, you can really see that we're developing a consolidation pattern. And I mean, in the crypto world, 20% is not an unreasonable range to have a range for a consolidation pattern. And that's kind of where we're at, right? You're 11.5 down to 9,500 range, and it keeps going up and down and up and down. And that is, and then looking across the chart, going back literally to even 2018, when Bitcoin hit its $20,000 peak, you can see that most of the activity was in this current range when we got up to these kind of prices. It was at 15 to 20,000 for a very short time. So it really didn't build any material support there, and it won't create much resistance either if we can break through. So that's what we're telling people to watch is look at your charts across as opposed to trend lines on angles. Take a look across because there's a lot of wall, if you will, being built in the current range, which means that if we tank here, it could be very hard to get back above it. If we get above it with some strength, we could see some new highs.
The mere notion of technicals in crypto has kind of been a contentious thing of late. When cryptos really first started coming on people's radar in the last year or two, I saw a lot of people really surprised at how effective your traditional, your low-hanging fruit technical analysis was, your Fibonacci, your 30-day moving averages, those sorts of things, how applicable they were in the crypto space. And then as the trade started to get a little more crowded, some people started to report maybe not as effective. I'm kind of curious, John, where do we stand now from a technical analysis efficacy perspective out there in crypto land? Is it still, surprising you how even some of these low-hanging fruit indicators are starting to work, or do we maybe have to go to that next iteration now, that next level, to find some crypto-centric indicators and correlations that are going to drive maybe the next big range of movements in the marketplace?
I'd say you have to really pick your battles. I think Bitcoin technicals we've nailed every move so far this year. It's been a remarkable year. So I would have to say that the things we rely on have been very effective, with the only exception being volume is a little tricky. Usually when things took off, and when we went to the highs this time around, there was big volume too, but it's not consistent. So you can't really rely on the buying and selling patterns in volume. But I would also add for any of your listeners that either trade altcoins or are interested in altcoins, I don't think they work at all. They'll take them way outside of any reasonable range of technical analysis and throw them right back in there. They're doing it right now. If you look at the Ethereum and some of the other large altcoin charts, you'd be dumping everything, and you might be sorry you did because they'll just blast it right. Bitcoin runs the show. So I would look at Bitcoin. I would use their analysis and then, understand more about the fundamentals of the coins I like that aren't Bitcoin. I probably wouldn't go too big in any of them. Does that kind of give you a feel for what we're seeing? Bitcoin's kind of reliable to an extent, as much as crypto can be. The other stuff, we really don't rely on it much at all.
That's interesting. We have heard that a lot, and that's been a frequent talking point on the show of late, is just that dominance rate, how dominant Bitcoin is. It was somewhere around 65, 66%. I'll have to check and see where it is coming into this week. But it has been this rally, this sell-off, all the news, all the movement has been all really pretty much all the volume on the Bitcoin side. You're right. And I think as a result, there is a high degree of correlation. I don't want to go into your secret sauce. I think if listeners want to get that, of course, they can head on over to cryptopatterns.net, check it out for themselves. But maybe if you want to give our listeners maybe some hints of some of the indicators that you think are maybe more effective than others, have at it, sir.
Okay, absolutely. I think taking a look at momentum on crypto is a huge thing, and trusting it, meaning when things start to move, making trades above key levels has been super effective, and not being afraid to get out and re-enter has been an incredibly strong trade strategy because the moves are so gigantic, they'll pull you out, put you back in. So, again, I would really, the tip for the day is look across your charts rather than up and down and studying, candle patterns and things of that nature, because they're far enough along in maturing this market that there's a lot of head fakes. They'll show a head and shoulders, then they'll break it down, and the next day take it right back through and make it fail. But, boy, I have to say, if you draw lines across your chart, you'll see the support, you'll see the resistance. You mentioned Fibonacci. That's another great way to do it. they have proven to be very reliable, and on the upside, 12,500 appears to be some serious resistance, and on the downside, 9,500, we have our eggs in that basket. And that's an excellent short-term trade right now. It's been working wonderfully. Is in above 9,500, out below. You haven't had to, and using closing prices, of course, and it really hasn't closed below 9,500, for the last couple of weeks. So it's been a great trade. Every time they want to drop it, you can buy back in.
And that's what's kind of exciting, I think, for a lot of our listeners. Is some of those old school, let's call them technicals that maybe aren't as effective in the crowded equity space, all of a sudden have a new life in crypto. So that makes it kind of fun, I think, for a lot of our audience out there. I know we talk a lot, obviously, about the vol and the skew and the derivatives and all that fun stuff too. Does any of those products, any of those data points, do they factor into your analysis at all over there, John, or is it pretty much just straight underlying technicals?
The one that we use religiously, and it triggered our like a confirmation for the biggest move of the year. When things were hovering around 6,500, next thing you know, you're at 14,000. I wouldn't say it's a technical indicator. It's just what's going on in the futures. and Bitcoin futures have been probably the most interesting game because it looks like no one's there. Then you start seeing some really strange activity, a big spike, and then a week of nothing, and then all of a sudden things take off. So we watch, moving average crosses and the activity of the Bitcoin futures, and that has been a tremendous indicator for buying and selling. So it's almost like they're running the show using God knows what exchanges, but then when they really want to leverage up or down, they get in the futures. That's been awfully reliable, is all I will say. People should know what's going on in the futures market.
It's fascinating. We're going to get to the futures in a little bit. Before we get there, we're going to do a segue through Options Town. A lot of this data, of course, coming to courtesy of our friends over there at SKU SK3W. I got to get them back on the show. They give us so much great data. See what's new over there. A lot new. If you like this stuff, volume, SKU, breakdowns, all that cool stuff, SK3W.co, the place to go. Let's check out the vol first. As you might imagine, we're up, we're down, we're all over the place. So the vol staying pretty firm out there again this week. 30-day realized. We like to look at realized out there. 30-day realized, pretty much unched from where it was a week ago. We were at about a 94 last week. We're at about 94 and a quarter this week. So almost quite exactly unched. Options volume, it's kind of been an interesting story. Again, this coming out of Deribit, one of the leading options platforms out there. And it's been remarkably light throughout most of the summer. It's kind of been a continual talking point of ours. Until this week, this sell-off this week and this movement to the upside has sparked some volume again. Remember, the barometer we like to use is around 30 million notional out there. When it's below that, it's kind of a quiet day. When it gets above that, things are moving a little bit. And for the last few weeks, we haven't had many, if any, days above 30 million. This last week was the exception. We saw, first off, show day last week, the 12th, over 40 million, 40.2 million. The 13th, 56 million. The 14th was the high of the week, 71 million. And then on the 15th, coming in just a little bit under 40 million, 39 million out there. So a lot lighting it up out there in Deribit options land. And if you're wondering out there, at least today, what was dominating the tape out there, it's pretty even between call buys and call sells, 32% to 34%, and then 11% for put buyers, 23% for put sellers. Not a lot to read into today's volume because there wasn't a lot of it, but of interest and of note, we can also parse the big trades out there for the week. And the biggest trade out there in terms, I should say one of the biggest, because contract-wise, there were some other larger trades, but I think in terms of value, it was the biggest trade. It was, interestingly enough, the DEES expiring on the 27th, 52,000 call. Yes, you heard that right, listeners. 52,000 call. Paper selling that almost 54 times, doing on a bit of a ratio, 53.7 times. Doing it for a fraction of a Bitcoin, 0.005 Bitcoin, which works out to $10,700 US in terms of net premium. If you're wondering, that's 112, almost 113 implied volatility. So that was the big trade of the week, actually. That went up actually today, this morning. So someone found a bid out there for these 52,000 calls, and they hit it, and they hit it pretty aggressively. Again, the net price was pretty small, but in terms of total aggregate premium, that's almost 11 grand. you can do a lot with that, I suppose, if you're okay tying that up. I got to assume that's a covered trade as well. So if it gets up to 52,000, I got a feeling that guy's going to have a smile on your face. John, what do your technicals tell you about the probability of a rally to 52,000 by December? That seems a wee bit optimistic, does it not?
It does. That being said, I'm waiting for this breakout before I commit, but I do feel like new highs are in the offing. I do. And you've seen Bitcoin can surprise everybody when it wants to break out into new territory. So I'd be shocked at 52,000, but not as shocked as, other things that you'd see in other markets. This market's insane. And if you look at historical patterns of other, super growth stocks, which you've done a lot of analog comparisons, the upside is well above 20,000. That's as far as I'm willing to go today. I can't say 52,000. And I do think year end is a target to look at if it's going to happen. We should see some big moves by year end. So, guy knows something.
There you go. CryptoPatterns.net says 52,000 by year end. Quote it. Stamp it.
Oh, but thanks.
I'm just kidding. I'm putting words.
All in.
I'm putting words. Yes, go all in right now. 52,000 or bust. I got a feeling there's a lot of listeners out there who wouldn't mind hitting a bid on 52,000 call. They would certainly sell some Bitcoin at 52,000 right now. I'm just going to go out on a limb and say that. So that guy finding a bid and crushing it. I'm not sure if it's still there after that trade, listeners. You had your chance this morning if you wanted to track it down. If you had 60 or so Bitcoin you wanted to dump, there you go. Let's see. Term structure out there in terms of volatility, pretty much the same as last week. Actually kind of not quite backward, the reverse, your old typical contango. Actually, looks like actually peaking in September. AUG contracts expiring this week are at a little bit shy of 86 in terms of at the money implied. You get up to about an 88 to the end of the month. Out to September, you get up to looks like about a 95. Then it comes off again to about 90 again back in the end of the year for December. That kind of mimics the VIX futures a little bit there as well, with December being one of the lighter points on the curve, which is kind of interesting in and of itself. If you wonder how the calls, the puts are stacking up in all this hot and heavy action this week, right now coming into showtime, we're up a bit. We're up to about 66% calls over puts. That's up from about 55% this time last week. Remember, the high is still about 73.5% back on June 17th. Open interest also up a bit again as well. Not surprising. You're seeing a lot of action out there, so people adding on, including 60 of these 52,000 calls from this. That's going to be one of my trades of the year, I think. I just love that one. It has a resonance to it. But the OI up to about 543 million from 528 this time a week ago. Still off those record highs from a few months ago of 635 out there. You were talking about the futures there, John. Those are an interesting one to watch as well, because you're right. They're puzzling sometimes, I think is the best way to put it. Some days they're lighting it up and you're like, what's going on out here in the Bitcoin futures? Because maybe you're seeing commensurate move in Bitcoin, maybe you're not, but the volume is lighting it up. Other days, Bitcoin underlying and spot is moving quite a bit. The futures are moving quite a bit, and we're not seeing a huge amount of action for the futures. Let's see what's going on today. Come into showtime, it was pretty light, and it still is pretty light. That front AUG future at CME is at 10,785 right now. It puts it up about 270 for the day. Decent volume, about 2,500 contracts in that front contract, another 500 in September. So you're talking about 3,000. Again, that's 15,000 contracts net. So not a small amount by any 15,000 coins, I should say, net based on the multiplier. So not a small amount, but still not lighting up the tape out there. Johnny, it sounds like you're kind of surprised as I am as well that the futures are perhaps as effective as an indicator as they appear to be. Does that surprise you and your team as well?
It does, but you just see it over and over, and you have to start trading what you see in front of you. And when those indicators are oversold or overbought, you should respect it. It's really that simple. It just says, now there were times, I'll mention two things that I think people will have some value from. There are times where they disappear and they're not meaningful. And volume is kind of a good indicator that those are those times. But when things start to spike up, and last week, I want to say it was early in the week, there was a up spike well above the sales volume on the daily chart. And all of a sudden, we bottomed out at 94.70 and back up over, well over almost 11,000. So good entry on a trade. I trusted that, and that worked out very well. The other thing is weekend trading. And I don't know how many of your listeners pay attention to that, but during going back over the last 18, 24 months, weekend trading was always huge games, and they'd move it all over the place, and then the gap would fill after the weekend, when the futures are open up. So I guess we're looking at 18 months now because Bitcoin futures started beginning of last year. Now these gaps are holding on the weekends. So if you see a serious move on the weekend, it's the probabilities are erring to it's real. So keep that in mind as you're watching your charts, because if you see, a big move over the weekend, don't play for the gap fill is what I guess I would say. Study your other indicators, but more often than not, those hold for a while.
We have some other guests recently kind of talking about that, kind of complaining about that a little bit, how, the futures can't really get them over the weekend, so you are seeing those kind of crazy gaps coming in on a Monday, or I guess in a Sunday when they kick off, between the futures opening and what's been going on over the weekend. Some people wanting a little bit more of a seamless transition there rather than the gaps. But I'm curious, you mentioned a lot about the futures there. Are they kind of your go-to vehicle now when you're looking at these technical levers and you're making trades? Are you going to the futures, or is it still the spot predominantly for you guys?
It's spot. I mean, I'd say it's 50-50. It's like study the cash chart and then go to the futures and double check and see where there's divergences, et cetera. But, there's so much volume on all these bazillion exchanges in the, spot market. You've got to see what's going on in that world.
And we got to see what's going on, not just in the world, but in the universe of altcoin. It's time for the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, listeners, it's time to go into John's favorite segment of the crypto space. Yes, the altcoin, where technicals are so effective. But that's because Bitcoin's still very dominant. Let's break down just how much that dominance is impacting the market right now. Let's look at the overall market cap. Again, take these numbers with a bit of a grain of salt, or maybe a large grain of salt. The percentages probably hold true. The overall market cap numbers, probably not. A little bit inflated, shall we say. Bitcoin, obviously, number one, looking at right about 193 billion in market cap. Number two, ETH, with about 11 and a quarter of the overall market cap. That puts it at about 21.5 billion out there. Then XRP, our old friend Ripple, number three, 5.8%. That puts it at 11 and a quarter billion. Gone, a far memory of the days when ETH and XRP were jockeying for that number two spot. Number four, Bitcoin Cash, 3%, puts it at about $5.8 billion. Right off the top five here, we've got Litecoin, 2.5%, about $4.8 billion out there. John, we kind of touched on it earlier, but it is a fascinating story just in general of how much of this recent movement, the recent volume, has all been dominated by Bitcoin. I know you were kind of joking before, but the technicals don't really work. Have you guys kind of just moved away from altcoin at this point at Crypto Patterns? Are you solely doubling down on Bitcoin, or are there maybe some pockets of the altcoin space where the technicals are still useful and still apply?
Well, every update on the newsletter has the following mantra, which is, until further notice, Bitcoin rules the market. So Bitcoin has to confirm anything else you might think about doing. That being said, we think that the stock market and the volatility in the real world going on right now is driving a lot of what's happening in crypto, specifically that it's waking people up to alternate investments like Bitcoin. And we're hearing things, you may have come across it as well. There's new futures exchanges that are well-backed opening up for Bitcoin. Fidelity is a major player trying to get up and running for retail investors for Bitcoin. And you might recall in March and even prior discussions, we were talking about Ethereum because Microsoft was a major player in the initial development of Ethereum. So everybody was kind of looking at that, but their use cases never really materialized. And so now all the other altcoins are looking like a big bundle, and you're not seeing a ton of differentiation in them anymore. And what's really interesting is if you go to a site called CoinMarketCap, where you're looking at all the different, you can see every crypto that's been issued. There used to be 10 coins a day that would go up 50 to 100%. Some small coin, somebody who's speculating. You just don't see it anymore. I mean, now the only game in town, to answer your question, is really stay focused on Bitcoin primarily. Everybody should own that if they're into crypto, and then the large altcoins. Other than that, it's pure speculation. And I think, as a final thought, that some of the names are the ones you want to keep an eye on because that's what people are going to look to diversify into as crypto gets further acceptance. So Ethereum continues to hold value, even though their development is horrible compared to other sites and other crypto that's being developed. And I like Litecoin because it's a mini Bitcoin, so to speak, and people feel safe. They understand what it does and what it's supposed to do. And it continues to, make progress in terms of its efficiency and per transaction. It's faster than Bitcoin, things of that nature. So try to stay with really simple fundamental stuff because I think there's a lot of distrust in all altcoins at this point, which is why you're seeing the massive dominance of Bitcoin. And you can rely on it compared to the stock and the gold market. No other altcoins are even coming close to being useful for something like that.
I'm glad you mentioned altcoin. Let's start there because you're right. It is an interesting story what's been going on out there. Litecoin, I should say, this week coming in right around 76.5 for showtime. That puts it down about $10 from last week. And John, one of the big stories in the altcoin world over the past month or so, and actually for a while longer than that, of course, the run-up of Litecoin leading into the halving event. Now we're past the halving, seeing Litecoin coming off. A lot of people looking to read into that a little bit, maybe trying to draw some parallels for the Litecoin halving, and maybe can we infer similar developments going to hold course for Bitcoin in the near future? I'm curious, were you guys big watchers of that Litecoin halving, and did the price action play out as you kind of expected, or were you maybe surprised by anything in that run-up and now the sell-off afterward?
It played out exactly as expected. I won't say that we called this big a drop, but we knew that it's a manipulation. I mean, the entire market is, including Bitcoin, is still small enough that the whales can control the game. And what our post said is, there's news, watch for volatility. And that's what they do. It doesn't matter what the news may be. And I would also argue China's kind of being used that way in the stock market too. It can be a fear factor. It can be an excitement factor. Well, the halving was something. Now there's going to be less Litecoin available. Miners are going to have to go out of business. It's going to become more rare. So you want to get as much Litecoin as you can. So you knew you better have a nice tight stop is my point. And you had a nice run up. But, the reality of crypto right now, in our estimation, is you've got a lot of high-end, sophisticated investors, hedge funds, and larger investors that are very happy to take 20% in very short order and leave the coins lagging. Drop them 20, 30% at a time, while retail investors wait for that heyday where it's going to go up 5 times and 10 times again. We hear it all the time. They're waiting for the next huge home run. There's a lot of profits to be made getting people to chase these things. So that's what we think is happening. It's actually, technicals are interesting because there's less sophistication in this market, maybe, so you could read the technicals and get some value. But in the end, they're taking the money from the retail traders. That's certainly what we keep seeing over and over.
So they bought into the Litecoin halving and they drove it up at the behest of the whales, and now perhaps they're reaping a little bit of what they sowed out there. Let's look out here. Speaking of a little bit of reaping coming off here, we got XRP, our old friend Ripple, also feeling the heat again. We talked last week how they broke through that pivotal 30 level. 30-cent level. I know, John, you said technicals are not holding for altcoin these days, except maybe for a little bit for Litecoin, but you had to have, I'm sure, noted in all of your analysis that 30-cent level to the downside seemed like a pretty firm support level for XRP for quite a while. Has your viewpoint on it, your technical viewpoint, anything along those lines changed now that we're below it, or is that just yet another indicator that didn't really hold much weight for you out in the altcoin space?
No, it would be exactly the way we'd be viewing it. That's a critical level. What you want to be careful about is saying that Ripple's done because it's below it. That's our point, meaning that they'll just chase you out and then spike it right back over, with no justification, with low volume, or they'll have a high volume. You can't really get any traction in reading how these things work. But if Bitcoin breaks out, expect Ripple to go right along with it, would be kind of our take on it. And that's why we kind of like re-entry trades right now, because there's no sense watching them take this thing down to 20 cents and no, Ripple's, obviously something's going wrong. They're getting sued. Who knows what? They're done. That's just not how the large altcoin market is moving at all. Back to the Litecoin example very quickly. We pointed out that one of the top 10, 12 altcoins, which is Tron, TRX, we pointed out that it broke down when none of the other large ones had, and we almost every time see the top 10 altcoins go in the same patterns. So we're like, expect everything else to break down. So if you're a fundamentalist, you'd be like, you're telling me that, Tron broke down and that caused Ripple to break down. Well, that is what we're telling you, yes. They're moving these things, the algorithms or whatever, are moving these altcoins very much in sync. The patterns are very, very similar. At least you should be trading that way until they prove otherwise. Until I see Litecoin go to 200 while Tron goes to 10 cents, or 1 cent, sorry, then you need to look at all the patterns of the large altcoins and look at them as a bundle. Absolutely, that has been the way to trade them.
Oh, so I guess I should delete my next bullet point, which says XRP is below 30 cents, so you should discount it. It's done. No, I'm just kidding.
No, I think Ethereum is the bellwether. As much as I'm not a fan of the actual development and where they're going with it, I still think it's traded like a high credibility crypto, and maybe they will produce someday. Somebody will step in and get it right. But I think if you want to see what's going on, you should not ignore what's going on with Ethereum if you're trading altcoins. That'd be our takeaway, and that's been extremely helpful to not bail too quickly and to not dive in too quickly.
That does seem to have the most crossover when we talked to a lot of our institutional and fund traders out there in general. What else they're trading outside of Bitcoin? ETH usually is the number 2 one. They say there's a reason for it. It's high up there in the market cap, obviously, as well. But ETH, by the way, down, threatening that 200 level right now coming into Showtime, down about 12 handles from where it was this time last week. ETH's always the one that was kind of in that conversation. Of late, Litecoin started to trickle in there as well a bit just because of the halving and all the interest that it drove. And percentage-wise, it was obviously one of the huge winners of the year going into Q1 and into Q2, so you couldn't really ignore it from that perspective. But it does seem Bitcoin and then ETH is always the number 2 one whenever you're looking in these conversations. XRP, our old friend, down, like I mentioned before earlier, down to about 2 cents, so well shy of that formerly pivotal level. I don't know what the new pivotal level is now in XRP. That 30 cent level it held for so long, about 25 cents, I don't know. But we're at about a little bit shy of 28, about 27.9 or so out there right now. So not exactly a strong week for XRP out there either. And Bitcoin Cash, if you're looking for the altcoin that's kind of bucking the trend, it's Bitcoin Cash this week, up about 10 handles from last show, up to about 322 right now. So Bitcoin Cash seems to be, if you're looking for the bullish story, at least in those top 5 big kind of crypto names, that seems to be where the bulls are hanging their hats this week. Anything else? Lighten up your tape in altcoin land, John, before we move on to some of our listener questions, sir.
We mentioned in March, and still stand by, that everyone should at least keep an eye on the Binance chart, BNB. We're not fans. I'm not going to make any secret about it. We've made almost no money in it, ever. It's an exchange that's essentially unregulated, but it's got the biggest following in all of crypto. It trades by far the most volume, and it's held up amazingly well. So it's an indicator you at least want to keep an eye on. And if it wants to break, it led Bitcoin before the big breakout. So it's just another one that we think is. You mentioned the 2 that we believe in most, which would be ETH and Litecoin in terms of altcoins that are good indicators. With the best long-term stories, but Binance should not be ignored. They got something going over there, and we don't know what's going to happen when Fidelity rolls out their stuff. I mean, people are going to continue. They've even said they don't want U.S. investors anymore, and yet it goes up. So keep an eye on it, BNB.
We have had a few listeners write in asking about BNB, so we have talked about it a little bit. It's been a few weeks since we've checked in on it right now, but there's news out there. Yet again, it's up. Another one, I guess if you want the bullish story, you got to go outside the top 10, even the top 20 in terms of market cap, obviously, to get to Binance Coin. It's about 28.5 right now, up 2% today. So not a bad day here, and maybe not a bad week for Binance. I know there's another bit of news driving that up again. Another week and some more news in Binance Coin. But you're right, that is an interesting one. Doesn't get all the market cap news, but it is one a lot of our listeners are intrigued. And speaking of our listeners, let's see what else you guys have on your brains as we answer some of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. We got a bunch. They're piling up here. Let's see how many we can get to, John. So put on your question answering pants. I'll take this first one, I think, because this one is more on the options side. I'll save you for some of the later ones. This first one comes from Jackie. Jackie wants to know, does the lack of options volume on Deribit week after week prove that there really isn't a market for Bitcoin options? You know, the hopefully someday emergence of Bitcoin options on the listed exchanges like a CME and others. We were thinking SIBO. They're obviously out of the game now. That's been a big talking point for us here. Obviously, Options Insider, it's in the name. We want to see more options out there. So we like that sort of thing. We know a lot of you out there in our audience do as well. And we have been, quite frankly, a little dispirited to see the quiet volume out there in Deribit. That's, the underlying has been moving. It's not the traditional quiet summer period. If, Bitcoin was staying around 12,000, just sitting there for months and not much was really going on, then we could say, okay, it's a typical summer doldrum period. But we're seeing movement in the underlying, and we're seeing decent volume in the futures, and yet not a ton of options volume lighting up the tape. So you're right, that was a little bit intriguing. Maybe you could say disturbing. That's kind of the term you kind of imply there. But this week is kind of putting a little bit of lie to that. We were glad to see a little bit more volume lighting up the tape. Like we said, most of the days this past week above that barometer we like to use of around 30 million notional. Most of the days last week on Deribit, we're above that, including that funky 52,000 trade. But so I think that shows when there is a decent movement, there is healthy demand. I think it's hard to divorce it completely from the fact that we're in the summertime. So I don't know how much meaningful conclusions you can draw from the day-to-day volume out there. But there hasn't been a ton this past week. It has been lighting it up. Let's see if that kind of continues going forward in the weeks to come before we really kind of write off this. And I think getting something that a lot of our U.S. audience can actually trade without a VPN would be a nice thing as well. That's going to open the floodgates. So that's why we want to see something like options on the Bitcoin futures on CME. That would really open the doors for a lot of our audience, and that would be certainly the way to go. There is, just judging from you guys anecdotally reaching out to us, there's a huge demand for that. Obviously, we preach to the choir a little bit here, but still, there's a huge demand for Bitcoin options out there. So I don't know if just the quiet last couple of weeks of Deribit are enough to say, put a pin in it, it's dead. Because certainly this last week shows there is some life out there. Let's keep an eye on it, Jackie. How about that? We'll come back to your question, and we'll look at this again in a few months and see how things are holding up out there. All right, John, Namdo wants to know, how far away are the crypto markets from being a real, quote, big boy market? That's an interesting question. I guess that kind of depends what you mean by a big boy market. I guess if you mean by institutions, then I don't know. We're still a little bit of a ways away from that. John, I guess it depends. How do you describe what a big boy market, how you define a big boy market? And then no matter how you define it, is crypto there yet, or are we still on the road to being a big boy market, sir?
I think we're on the road. I think institutions are a great, piece of the definition for sure. I think what started to happen and continues to happen, but hasn't happened in terms of wow, that was a flush, is we have not seen the altcoin market, all the wannabes disappear. And I think that's going to be a real indicator that we're maturing and the money's going to where it's going to be going for a longer term. And, I think you nailed it with the question from Jackie, which is, let's see some options. Let's see some liquidity, ways to trade it on registered, usable liquid exchanges. And I think that would be the final piece of it. With that said, I think the people that matter are watching it. And I think there's a lot of people making a lot of money, probably some losing a lot of money on it too. And, don't be surprised when it becomes a big boy market if you wish you had looked a little closer when it was a small boy market. I guess that's kind of my final thought on it.
Yes, I like that. Get in while it's small boy before the big boys get in. If you want to know more about the evolution of the crypto space, hopefully you guys checked out my conversation I had with the crypto mom herself, Hester Peirce, over there at the SEC. It was on our show feed for this show last week, so you can catch it there if you missed it, or go to our Options Insider Radio interviews feed where that conversation, we had a great conversation about that, the evolution of the crypto space, and a lot of other things out there. So if you're interested in that, what was the name there? Namdo, and everyone else out there who has a similar question, that's a good place to go. But yeah, I think we're still on the road there. The the institutions still tipping their toes into crypto. We haven't seen a lot of the functionality we come to expect in very basic functionality we come to expect in other markets that hasn't really crossed over and made its way into crypto yet. People are trying. The vendors are there. They're working on it. We still don't have a lot of regulated exchanges here in the U.S. You guys can trade. So there's a lot of issues. We don't have the ETF. A lot of people think the ETF is the bellwether we need. And once we have that, then it's a big boy market. We don't have that yet either. So I think no matter which barometer you're looking at it, engaging it by, we're not quite there yet. But we're getting there. And it's a good time to start checking it out before it becomes a big boy market. John here, next one here. Let's see. SSQPC. interesting handle, wants to know, is having in Litecoin the big bullish event everyone thinks? Can we expect the same for Bitcoin? John, obviously this was the big question in the altcoin world for the last month or so. What's really going to happen with the Litecoin? And that second question he has is this other big question everyone's asking in the Bitcoin world right now. Do we think what we saw in Litecoin is going to play out in its big brother market, Bitcoin? Do you think we'll see similar levels of run-up and then sell-off in Bitcoin, John? Do you think we can use Litecoin halving as a blueprint, or are they too dissimilar to really make meaningful comparisons?
I would study the charts. I think there's something to be said for that, but more generally, and I think where I can give absolute guidance is volatility. There's no question about it. It will get played, it will get sold, it will get bought, it will get chased. I mean, that's where other technical analysis and, understanding of trading would have a huge impact on what you want to do in response to that. But when it comes and during the 30-day run-up, maybe 60-day run-up, it's going to be big moves. Period.
Volatility, a term that's near and dear to our hearts there. We're going to be getting to that again, maybe in a little bit, Bitcoin volatility, with some of your questions here. In fact, here, let's get this next one right now. Soltud. Either way, they want to know, are there crypto vol products I can trade right now? There's a long answer and a short answer. The short answer is, I'm assuming you're a U.S. listener. Not really. You got to go through all the hoops you usually have to do to trade on a Deribit or a BitMEX with the VPNs and everything. And it's not something I really recommend for most of our domestic audience here. International, have at it, go crazy. In terms of, there are Bitcoin vol indices. There are people out there tracking this, including our friends over there at T3 Index. They, of course, the creators of the Spikes volatility product, which is kind of a alternative to VIX right now in the listed options space. They've created a Bitcoin volatility index, which right now is actually at a 103.79. That's up about 5.5 points, or about a little over 5%. If you're wondering how that's performed of late, it peaked at right around 135. That was on June 28th. So in the teeth of that sell-off in mid-June and late June, that's when we saw that Bitcoin vol index peak to its high of 135. Then it got up to about 130.5 again back about a month ago, exactly a month ago, July 19th. Then it's kind of drifted south ever since. It hit a low of about 95.5 back last week on the 15th, and it since has bounced a little bit. I've seen a little bit more underlying movement. It's up to about 103. So it's off its recent highs of 135, but it's not quite at its longer-term lows. Back in March, it was at a 44. So we're nowhere near that either. Obviously still elevated, but not quite as crazy elevated as it was in all that tumult of June out there. LedgerX also has a volatility index that they're calling the Bitcoin Fear Index. I'm not sure what SIBO thinks of that, but either way, they're terming it the Bitcoin VIX. So we have a couple of different players out there from an index perspective. These are not tradable yet. They are pretty much just indices for you to watch, but worth watching at the very least. But on the tradable front, not really a heck of a lot yet, without really jumping through a lot of esoteric hoops. It's something that's pretty illiquid that I probably really wouldn't recommend you trade yet either. John, you mentioned volatility being a key indicator for you guys over there at Crypto Patterns. Do you guys look at any of these new crypto vol indices? Are these things you're starting to incorporate into your analysis?
I just recently, yes, as we start to see them published, with some history, because we study patterns, so we need background on that. But our indicators have been really good at, determining when you're going to see big ranges. So we definitely are starting to factor them into our trade strategies.
All right, listeners, that music means, unfortunately, we've come to the end of another epic journey through the world of crypto. We talked all the technicals in Bitcoin and all the altcoins, as well as what's going on the derivative side, on the futures, on the options, on the skew, on the term structure, realized, implied vol, all that good stuff. Hopefully you enjoyed it. If you did, tell your friends, tell all your other cohorts out there in this still little boy market as it grows to a big boy market of crypto. We do love seeing you guys all popping in there. See new faces, new names. We love our options audience too, obviously, but getting a nice little blend with this show, which is always fun out there. And John, you gave us some good levels, some good analysis. Obviously, you guys are posting some stuff on theoptionsinsider.com, so if the listeners want to read those, of course, I encourage you to check them out. Then if they want to go big, they want to take a deep dive into crypto technicals, and they want to check out more of your stuff, John, where should they go? What should they do?
CryptoPatterns.net. Just head on over, all one word, CryptoPatterns.net, and we have a subscriber base and certainly do custom work for people who want it and try to keep you out in front of everything going on. Make sure you stay safe.
CryptoPatterns.net. Is there a social media handle to go along with that as well?
At CryptoPatterns on Twitter.
There you go. Hit them up, listeners. CryptoPatterns.net or at CryptoPatterns. Give them a follow over there on the old Twitters. And you can also stay tuned, obviously, to the Options Insider. We post some great technical updates from these guys as well. I encourage you, check it out. These markets are interesting. You need all the data points you can find, and they're providing them for you. And on behalf of John and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in those questions. Keep them coming. We love to hear from you guys. You guys are how we line up this show. We want to hear what you guys are looking at, what you're trading. It helps us to plan the show and to line up the guests you guys want to hear. So if you have a question, you have a guest suggestion, all that fun stuff, we love to hear it. You guys know where to find us at Options on most of the major social media platforms. So head on over to theoptionsinsider.com or the old-fashioned way, questions at theoptionsinsider.com. That works too, or hit us up in the live chat. You guys know where to find us. And we'll see you back here next week for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.